Welcome, friends, back to Behind the Capital Curtain. As you know, we're going to be pulling back the layers of complexity in the world of business and commercial real estate deals, really to reveal what really drives top tier investment opportunities. Hosted by me, your friend, Dave Kotter. And remember, the show explores the art and the science behind investing in exceptional commercial real estate and businesses. We're going to do a deep dive into structures, strategies, any secrets that stand out to make an investment successful. And I'm really excited to have on the show here today, Mike Stohler. And I'm just going to give you a little background on Mike. He's the co-founder of Gateway Private Equity Group. It's a hotel real estate investment firm. When the multifamily market shifted back in 2016 and the cap rates shrunk, I think we all remember that, pivoted into hotel investments for higher returns and better value add opportunities. Since then, he's added branded hotel assets in the United States and is currently buying his first boutique hotel in Spain. Great to have you on the show, Mike, here today.
Thanks, David. I appreciate it.
I'm just going to dive in, and I want to get into maybe the way you think or thought about this pivot. So you pivoted back from multifamily to hotels back in 16. So what does that pivot reveal, I guess, about how investors should think when markets shift in any sector in commercial real estate?
That's a great question. When I first started in multifamily, I was used to 8, 10, 12 caps. And someone came in, I was fat, dumb, and happy. And, I would show up once a month and I was playing golf. But then this big group came in and wanted to buy everything, and I kept turning them down. And then this is crazy. At IHOP, they invited me to IHOP over pancakes and coffee. They actually wrote a number on a napkin that I couldn't refuse. And I was like, I thought that only happened in the movies, but that really happened. So then I was like, now what do I do? I was buying at 8, 10, 12. I just now sold at 4.5. Do I want to then put all this money into something that only makes 4.5%, at that time? And ladies and gentlemen, it's all about networking. It's all about anyone and everyone taking other people to coffee. I knew a guy that had 25 years hotel experience, and never get into an asset that you don't know without a mentor.
Sure.
Okay. That's the big thing. Talked to him and I said, hey, I've got a lot of money. Talk to me about hotels. Hotels are what I was used to, 8, 10, 12 caps, buying in tertiary markets. I said, teach me everything there is. And then what I did is I said, I'm not going to pay you, but I want you to operate them. I'll give you a property management fee, but I'll give you a cut at the end. So now he has skin in the game, because the more money he made me, the more money he would make. And that's what got me started in hotels.
That's a great story. And many people wish they have that little napkin experience. Would you say that when you shifted into a different asset class, that hidden lesson is what you said earlier, or is in terms of you got to really know what you're doing when you get in it? Or is there anything else that you would say would be a hidden lesson?
Yeah. Ladies and gentlemen, you have to understand, hotels are not real estate. Multifamily, self-storage, all these other things are different asset classes of real estate. Hotels are a business. It is a franchise business, if you go franchise, that happens to sit on real estate. There's not much that aligns between multifamily and hotels. Even the way you do due diligence really, really opened my eyes. The terminology, the way that, the hotel franchise, Marriott and Hilton won't even give you the franchise if you don't have experience, because they're not going to risk their brand and their reputation. So it just really opened my eyes on just how different, it's like buying a business.
I agree with you wholeheartedly. It is an operational business with different value components. When you look at investing in hotels, is it just that there's an operational component to it that's much different, or is it that there's so many more variables? You're dealing with hiring of people and a manager and staff. What are some of those major components that delineate from just a multifamily? You got your property manager, your leasing, you're out.
Yeah, you're done. Maybe have an on-site manager, on-site maintenance person. So dealing with hotels, number one, when you look at someone who's selling it, is that franchise right for the market? Okay. If you're in a small town, Arizona, off of a highway, do you really need a Marriott or Hilton, or maybe it's a Quality Inn or something with truck driver parking? So you have to look at it a little bit different instead of saying, "Hey, here's a market, it's growing, it needs multifamily, let's just buy it." It's not, now I have to figure out, is the franchise, why is that hotel not doing well? Well, it could be the franchise isn't good for that area. Does it have the driver? So now I'm looking at what would
Mm.
drive people to stay at that hotel. So now it's another type of a mindset, instead of saying, hey, people are coming, people need to live. They need multifamily, they need residency. So now it's, is there a hospital? Is there event centers? Is it off of a highway? Would truck drivers stop there? You're thinking about why people would even want to stay there. And then just the due diligence of debt to service coverage ratios, the
Mm.
ADRs. Is the city growing or not? Because now it's just not, do they need housing, but do they need that hotel? Is there too many hotels? What type of hotels are in the system? So it's more of a much broader scale due diligence look, that even before I hit the numbers, it's just whether or not to franchise, the city, the area, what drives people, so there's a lot of background before I even hit the numbers.
And it seems like a lot of those variables boil down to the ultimate customer that's walking into that hotel. Why
Mhm.
would they want to come there? What would
Yeah.
drive them to want to be in that city? Why would they come and have an experience there? It's very
Yeah.
much down to that individual
And
user.
is it a blue collar city? And so do you need more of a blue collar hotel, maybe an
Mm.
outdoor corridor, Quality Inn, or, something like that, Comfort Inn. So you have to really look at who's coming there, what type
Mm.
of clientele. And yeah, it's very different.
What are some of the myths, Mike, that you've seen over the years? You're seasoned and been around, been real successful.
Mhm.
You see investors believe about commercial real estate deals versus the truth about what
Eh,
it really does to get into commercial real estate deals.
boy, I think we could write books about that, right? Number 1, and this is real estate 101, never buy off of emotions. All I care about is, does it bring in the cash?
Yep.
And does it bring in my investors cash? And I got kind of stuck in that in the early days. It's like, man, I wanted this Hilton hotel. It had a rooftop bar. I want to go get a drink at my own bar on the rooftop, this glamour type of a thing. But the hotels that make the most money, Motel 6s. It's no free breakfast. You get internet. You've got the $60 to $80 ADR, and it just cash flows. So
Mm.
it's not as sexy. So in any asset class, it's kind of the same of maybe A class multifamily. They make 2%, 2.5%. Because it's just so expensive. Maybe the B's, are a little bit better, but then the B minuses. You look at what makes money, not, what you want or dream about buying. You don't need the granite countertop. So that's the big one. The other is, in hotel business, the non-sexy cities. It's those
Mm.
steelworking, blue collar. Some of my worst investments were these higher end corporate market,
Mm.
business park, little fancy boutique type things. And it's like, well, after COVID, no one went to those. It was all
Yep.
Zoom calls and those types of things. So you have to look, and COVID changed a lot in my mind. It's like, okay, what type of hotel can withstand the market the best? So it's those type of switches. But in real estate in general, it's, don't skimp on the due diligence. I see so many people that I coach and mentor, they skip
Mm.
due diligence because it's either boring for them or they don't understand it. And I'm like, you'll get burned if you don't. I get hotel deals where there's two different sets of books, and I have to find that.
Reminds me when you were sharing some of those wisdom insights. Do you remember that book, The Millionaire Next Door?
Road.
Where they went Do you remember they went in with assumptions that all of the wealthy people lived up in this area, and then they found out it's all the guys that just kind of were the plumber, all business owners had the just kind of normal cars, and they were like, "Oh, they're the
That's it.
ones with all the wealth."
Yeah.
The just baseline, simple, nothing fancy. So I love that.
It's
In your experience, when you share some of those things, what would you boil down this idea of a mediocre commercial real estate deal from a great commercial real estate deal? You've been
uh
in lots of deals. I'm sure we've all been in good deals. I've been in good deals. I've been in bad deals. From
mhm.
your perspective, what is that one kind of major thing that you go, this is the delineation of what
Yeah.
makes a really good deal versus a mediocre? deal?
Yeah, that's a great question. And, I just turned down a 1031. I'm going to have a seven-figure tax bill come January. But here's the thing is I could have chased mediocre deals
Mm,
in today's economy and fight for cash flow, or I could just take the hit. And what's easier, they're both painful, but chasing mediocrity and hoping that it eventually cash flows
mm.
is a lot more painful than just going ahead and taking a tax hit. The biggest thing is I have now, after all of my experience, my due diligence checklist is to the point where, like, I won't look at deals that have a DSCR, ladies and gentlemen, it's a debt service coverage ratio. And in the due diligence period, you look at what brokers give you, and they'll do a DSCR number based on interest only payments
Sure.
to bring it up. But to me, it's if it's not above maybe a 1.3, a one
Mm.
four, then I'm like going, okay, there's a lot more work for me to do to bring it up to what I want it to be. So that might be a killer. But the other things are if it doesn't have at least two or three drivers and not just one. Prior to COVID, if it was near a university, great. If it was near an event, great. If it was near this, great. But hey, what if
Mm.
no one's going to school? What if no one's going to the concert venues anymore? So now you need more than two reasons. If you're in the office, you look at why people would go there. What happens when the economies? I don't think a lot of people think anymore of what happens if there's a downside. What if there's shifts? So I'm being a little more conservative nowadays, and I
Sounds
think a
like
lot do that. I don't think a lot of people are. They're still boom. Let's just go in and
discipline. If I'm
uh
listening to you thematically, that
yeah,
discipline is really the undergirding character factor
yeah,
when buying commercial real estate and hotels specifically, following a disciplined approach and just staying focused on that. And then through all of those steps that you do, that it surfaces things up to the ground that you say, this is drawing me deeper in, or it's making me push further away from that, which makes it much
yeah,
more objective as opposed to emotional. That you're just saying, I'm just following the process and my discipline, and then it will
yeah.
just, it's either there or it's not.
You have a lot less failures if you stay disciplined. If I go to bed at night, my gut feeling is like, man, should I really buy that? I've already made that decision.
Yeah.
Okay. Because of my discipline and the due diligence, like, man, should I, as soon as I start thinking that way, then I have to convince myself, why would I ever buy this? Now it
Mm.
becomes an even harder task instead of, yeah, let's give it a shot. I've had maybe one win when I said, yeah, maybe we'll give it a shot.
Why do you think people don't go through that process? Any ideas?
Mhm. Yeah. Either I would say they've watched too many HGTV episodes and they just know it'll work because there's no
Yeah.
failure.
Yep. YouTubers.
They're too anxious. It's kind of I see two type of people when I speak. Those
Mm.
that have analysis by paralysis. And yep, two more of these. I just need you to hear one more time, another seminar, and maybe I'll jump in and then, oh, maybe this is bad, this is bad. Or the people that are so excited that they just go bam, they jump in, undisciplined. And both of those are failures. Failure by not doing anything and failure by doing something too quick. What you have to do is I can't stress this enough. And David said this, the discipline necessary. I've been heartbroken because I've really wanted beachfront properties and I've really wanted these things and I almost bought some of these things, but my discipline said, Mike, you're getting emotional. You want the Mai Tai on the beach at
Right.
your own resort instead of buying a property that nobody's sexy. Nobody sits there and says, man, I can't wait to go to that Quality Inn in Topeka that you just bought. But those are the ones who make money. So you have to stick. But here's the thing, you have to have that mentor. A lot of the people that make those mistakes didn't get the proper coaching, the
Yep.
mentors. They're just kind of running around doing things. They're raising money and let's throw a dart and see if it sticks. And we're all that way when we're
Sure.
in our 20s when we started. But that's the biggest thing is they just don't have the discipline or the mentorship in order to get that discipline.
It sounds like one of the most important things if you're newer or going to think about getting into a hotel with no experience is you've got to find a
Mhm.
mentor that has some gray hairs on their head or sometimes no
Or
hairs
no
and
hairs.
have them shed some of those wisdom wounds of
Yeah.
what to do, what not to do in order to really accelerate and bypass go, and also to help those idiosyncrasies of people's personalities that might be, I need so much information that I'm just going to stay frozen over here in the corner,
Mhm.
help move them along. And then those guys that are ready to aim and shoot before they even aim,
Yeah.
to pull them back and say, hey, you got to slow down a little bit. Would that be
Yeah.
fair to say?
It's a must. Look, I got started, I call it the PG days, pre-Google days. And I couldn't thumb through the yellow pages and say real estate mentor. And my first deal, I bought 8 homes because I went to a seminar and they said buy homes. And I said, okay, I bought 8 homes. And then I was like, well, how do you become a landlord? I don't, their paperwork. I failed miserably.
Mm,
Why? Well, maybe I jumped in too quick, but that's not the point. But the point is I didn't have anyone to help me. I didn't have anyone to ask questions. I didn't know how to do anything. So yes, ladies and gentlemen, whether it's a RIA group, real estate investment group, whether it's networking, there's always these coffees and lunch and learns. Be careful with the seminars. There's only maybe 2 seminars that I've ever been to that have ever been worth it. And I've been to dozens and dozens.
mm,
Be careful with the seminars, but get that person that has a lot of success. I've been in it 27, 28 years now, and we want to teach. We want to, because we don't want you to make the mistakes that we did. So
yeah.
yes, number one is, especially if you go into a new asset class or you're new to anything, reach out to people and learn so that you're either going to spend the money learning or you're going to spend the money failing. So I'd rather spend money on learning.
I couldn't agree with you more. It seems like either people, for whatever reason, whether they're scared or they're prideful or
Mhm.
whatever that reason is, don't reach out and
Mhm.
ask for help. And
Mhm.
I think perhaps sometimes, and maybe even for the listener here in our audience, they might have some head trash going, I'm not going to
Mhm.
waste his time. He's not
Yeah.
going to want to spend any time with me. So they
Yeah.
might then just jump into something that might be
Mhm.
unhealthy, such as going and spending a lot of money at a seminar
Yeah.
that sounds rah rah, but
Mhm.
there's no substance to it. And so, what would you say to that person who might be sitting there saying, I'm ambitious and I want to do something, but I'm not going to reach out to Mike
Mm.
because, he doesn't want to talk to me.
What's the worst that could happen
Yeah.
if you reach out to me? Okay, that's the first thing. Most likely, I'm going to answer a few questions. Now, if you keep bugging me every hour, every day, I might have to charge you, and have you in one of the classes. But the worst thing that could ever happen if you reach out to 10 real estate people that have decades of experience is 9 say no, but 1 says yes. That happens to all of us. That happens to me in everything that I do. I syndicate hotels now. I talk to
Mm.
100 people, 5 might invest. It's like, but if I don't reach out to 100 people, I'll never get a hotel. So you learn to say, who cares if Mike says no, or who cares if Mike can't do it this week? Ask someone else. Don't be, I don't know, maybe it's my military training. It's like going, I don't care if you say no. At least I asked. You could have said, David could have said yes. And now I
Yep.
have all this experience. So don't ever be afraid, because growth is knowledge. Knowledge is growth. And you can't get the knowledge or either one unless you ask people.
You said something at the beginning of the show that resonates with me is the skill of networking.
Uh,
I can't even begin to emphasize to listeners that are a little younger. That is a skill that is critical. You have to be willing to get out there and engage with people, get from
uh,
behind the screen, pick up the phone, like pick the phone up, call somebody, go have a coffee with them. And it just seems like that's a skill that is so critical to have success is
mhm,
being willing to take the risk. It's a little scary, but just
mhm,
being willing to
yeah,
reach out and just say, hey, here's what I'm
mhm,
trying to do. What do you think?
yeah.
And see where it goes. Love your thoughts on that.
Yeah, well, it's number 1. If you said, "Mike, list 10 of the number 1 things in order to be successful or even begin." Number 1 is networking.
Yeah.
Um, I play golf. I'm a member of a club. People ask me like, "What do you do?" You're golfing on a Tuesday at 10 a.m. And I just smile and say, "Hey, why don't I buy you a beer afterwards?" And the other thing is, I still go to masterminds. I'm still involved in masterminds. That
Mhm.
is knowledge. You think, Mike, what are you going to learn? It's like, well, you know what? I am about that big compared to a lot of people in the real estate world. So if you surround yourself with people that are better than you, and they say you're the sum of the five closest people that you hang out with. I make
Yeah.
sure that I hang out with people that I am the small grasshopper in the group. And why do I do that? Because I still need to learn. I will always learn. These masterminds, I'm getting ready to go to one next month. They're high end net worth people. It's like, oh, why would I not want to talk with them for a weekend, and learn? So,
Mm.
ladies and gentlemen, grab that coffee, go to the RIAs, go to networking events, Google. It's like, well, I don't know any. Google, I'm in Scottsdale real estate meetups. I mean, it's that easy, and start going to some. Number one, David, I have more investors, I have more mentors, or I have more JV partners by networking. I don't know anyone. I'm a small town kid from Indiana.
Sure.
My entire success is people that I've befriended.
So true. So true. Couple more questions. What types of hotels would you say perform consistently regardless of the market conditions? And what would
Uh-huh.
you say does that teach us about resilience in certain areas of commercial real estate?
The best are the limited service because their expenses are really non-existent. The lower mid-scale to mid-scale do really well. What that means is it's like the quality in the wind gates, maybe wind
Mm.
gates probably upper mid, but the quality ends, the sure stays, extended stays are always really, really good. But when you get into the mid scales, then you have to sit there and say, okay, well, it needs to be off the highway. My hotels that did the best during COVID were like a quality inn outside of a major city on a highway. Because who kept America going during COVID? It was truck drivers. And if you had truck driver parking, you're off the highway. It actually did pretty well during COVID. So those do the best. Now, in today's market, where the middle class is really starting to, they can't even afford groceries. So now the big resorts and the fancy boutiques it's either way. The ones that are heavily on conferences don't do well. But if you're a high end enough that where you don't have conference space, you just are $400 to $600 a night.
Mm.
Those type of people don't care what the economy does. They're still
Yeah.
going to go on their vacations. Those type of boutiques, that's the kind of like the ones in Spain that we're doing. That clientele, they don't care. So
Mm.
it's kind of both ends of the spectrum. The really the truck driver type one or the really rich one. The ones in the middle really, really fluctuates.
That makes sense. So, two more things as we wrap up here that I'm curious about. Two things. What is one habit you do
Uh-huh.
every day that's your go to thing that has been your mainstay for your life, success, etc.?
Uh,
And one above all else that you would like to share if you're just having your cup of coffee with somebody and you're sitting there and just say,
uh,
above all else, my friend, this is the thing. Do this and you will have a real success in life.
the biggest thing, is taught in the military, is taught by a lot of mentors now, is quiet time.
Mm.
Every day, I get up, have my coffee, no phone, no internet, no wife. I go in, and it can be at night. A lot of times they do
Yeah.
it at night, and I might put on the meditation headset and I decompress. Sometimes I pick up one of these guitars,
Mm.
put on headphones, and it's a decompression that I do every day. It's very, very important for your health, for your mental well-being. If I just put on headsets and play one of these guitars for an hour and just just let it out, that is the number one thing that's really, because then when I wasn't doing that, it would take me 3 hours to get to bed because now I'm just thinking,
Oh.
this is what I
Mhm.
did today, this is what I need to do tomorrow, this is what I need to, and I would never go to sleep. So quiet time, decompression time is number one. And working out.
It's good. Those are good habits. And then what about above all else? You're sitting there having a cup of coffee with somebody, but above all else, this is the most important thing. What
For
is
me,
it?
it's if you're getting ready, started in real estate or anything in life, and I tell people what was that switch? Find your why. And above all else, if you pursue your why and It can't be money. Don't say money because money will come as a result of the things. But what drove me is I still have it on my desk. Build a life I don't need a vacation from.
Mm,
That was my why. So every time, every day I got up in the morning, every time I had a heartbreak or a heartache or a success, I sat there and looked at this picture that I drew on with a marker, magic marker on a printer piece of paper and just taped it. And it's been there for 15 years. That is my above all else is find your why. Because in order to succeed and to be pushed through the hard parts, you need to concentrate on that end game. And for most people, it's the why.
it's really good. Love that. How would people get a hold of you, Mike? Anything that you want to share for how they can reach out?
Sure, I am very, very active on LinkedIn. It's Michael Stohler. My website, Gateway PE, is in private equity, gatewaype.com. I also have a podcast called The Richer Geek. And let me know. I'd love to answer any questions. Let me know that you were on, you heard me on David's podcast. I'd love to reach out.
Mike, this has been a pleasure. Thank you so much for taking the time. Learned a ton myself, and I'm sure the audience will as well.
Thanks for having me on, Dave.